June auto sales from top U.S. automakers coming in line with expectations today. But of course, there are concerns that could be disrupted by President Trump's policies. The EU warning of a $300 billion hit in retaliatory tariffs if the U.S. imposes auto import tariffs, the likes of which the president has threatened at 20%. Meanwhile, the trade group representing GM, Ford, and Fiat Chrysler are saying that a 25% import tariff would increase the price of imported cars by nearly $6,000. Joining us now with his take, former General Motors Vice Chair Bob Lutz. Always nice to have you, Mr. Lutz. Give me your take here. 20% tariff on autos coming from EU, mostly Germany. What's that going to do?
Well, you know, this is President Trump correcting something that's been out of whack for the last 30 or 40 years, where Europe has 4 times the automotive tariff that we have. They have 10%. We had 2.5%. China had 25%. I mean, other countries have been basically plundering the American market and making it nearly impossible to sell American vehicles overseas. And President Trump is fixing it. Now, the 25% and the $6,000, that's all scare stuff. And I could see where GM and Ford have joined in the protest against the 25%, because at this point, it also covers NAFTA, Canada and Mexico, and all of the domestic companies have very heavy manufacturing facilities, especially in Mexico, but also in Canada. Well, my guess is that 25% is never going to happen. It's just the big stick to threaten everybody with. And what the president is really after, and God bless him, is to get a level playing field so that American products aren't disadvantaged.
Bob, I think one of the recent times we spoke to you, we mentioned the 25% duty that we have here on incoming light trucks, pickup trucks. That's really where the growth is, where the profit is for North American auto sales. And you said, well, look, I think we'll be fine. You know, our pickup truck business produced domestically would do well. Don't you think the Europeans feel the same about their domestic car business? I mean, we're kind of looking to get access to a mature market for vehicles, and it's just unclear. I would wonder, if you're running GM right now, what the risk reward is of even saying, okay, fine, now we have lower duties in Europe. How many Chevys are you going to sell there? Well, I think specialty products like Chevrolet Camaros, Ford Mustangs, American sport utility vehicles, crossovers, there's a lot of demand for that in Europe, but American vehicle sales in Europe are at a symbolic level, because by the time you add the external tariff and the 20% value-added tax, you know, a Ford Mustang is $60,000 in Germany, whereas German cars in the U.S., because they're tax exempt when they're exported from Germany, they don't pay the VAT. They get to the U.S., pay 2.5%, pay a 5 or 6% sales tax, and a Mercedes-Benz or BMW is cheaper in the U.S. than it is in Europe. I mean, this is ridiculous, and we've accepted it because it's been this way for a long time. So we think it's the natural order of things. But the natural order of automotive trade is what in the industry we call the international car exchange, where everybody has sort of the same tariffs and the same tax load on the cars, and everybody trades cars across international borders. That's fine. And whether this would result in a sales surge for American producers immediately, the answer is no, it probably wouldn't. But over the years, especially as the U.S. becomes very, very skilled at autonomous cars, you know, I would see, we got to do something to balance exports and imports. I mean, look at the country's trade deficit.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.